There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make you a little money. My job is not just to entertain, but to educate, teach you, really figure it out together. So call me 1-800-743-CNBC. Tweet me at Jim Cramer. Now, there comes a time when you just don't even want to defend an investment idea anymore. It's just too tiresome. It's too painful.
The house of pain.
But if you think it's right, if you think it's a long-term winner, then you shouldn't stop. And that's how I feel about the data center story on a sedate day, where the Dow inched up 4 points, S&P advanced 0.16%, but the Nasdaq did gain 0.46. Every day I feel like I do battle inside my head, just letting in my head, worrying about whether it's sustainable for the tech titans to keep spending fortunes to build out the infrastructure for AI. I worry because of things like what happened last night when Joe Tsai, the chairman of Alibaba and an executive I have tremendous respect for, talked about the, quote, astounding levels of spending on technology-related goods. He went on to say, I start to see the beginning of some sort of bubble. This man has great vision. I was sick to my stomach when I read these comments. I knew they'd be picked up all over the place because Joe's a well-known character, recognized for his savvy nature. I figured he could throw cold water on the entire data center gang, and that's exactly what he did. The stocks were down long before the get-go, as this group trades all early morning. You could just feel it. You could hear it. I was thinking, I don't know, bubble, double, I don't know, Troil in trouble. You know, it's frightening, okay? Bubble, bubble, bubble. And you know how it just seeps into your consciousness? And that's why I want to retire that word and instead talk about whether it's a capital expenditure boom. One that might go bust, but it's a boom. It's not a bubble. We've had some big capital expenditures booms over the years. Deutsche Bank recently put out a truly stupendous piece of thematic research about capex booms and busts. The report talks about the 18th century canal build-out, the 19th century railroad mania, excuse me, Apple, the 20th century real estate explosion, and the dot-com and telecom bubble, all of which ended with incredibly heavy losses. But there are other capital expenditure booms that didn't go bust. The interstate highway system, the post-World War II Marshall Plan, the electrification of economies around the world, nuclear power, renewables. These were all fantastic themes, and no one ever called them bubbles. They all turned out to be worthwhile, but they were started by the government, not by the private sector, where we were left with a legacy of greatness, but not a lot of profit from it. Now, I think people like Joe Tsai look at the AI capex boom and figure it's a big bust for Microsoft's Copilot, ChatGPT, xAI's Grok, Alphabet's Gemini, as well as others like Anthropic, Claude, and Perplexity AI. After all, it does feel like the dot-com bubble of the late 90s, and I lived through that. I get that. Lots of similarities. So many companies involved look like Netscape or InfoSpace, MySpace, GeoCities, America Online, all barges destined for the scrap heap. But most of these private sector capital expenditure booms did have a handful of winners. Let's not forget that the dot-com boom did produce a couple of incredible companies, Google and Amazon, and there were a few others that actually worked. About Priceline, now Booking Holdings. Sure, a lot of companies did go by the wayside, but Google, Amazon, and Priceline were visible winners that never looked back, and they made you a fortune. Right now, at this very moment, you have a handful of companies all vying to be winners in the chat/agent space. They love to win, but more important, they hate to lose. So yes, Joe Tsai is right. The data center capex boom could turn into a trillion-dollar bust, or maybe even a multi-trillion-dollar bust. But that's only for the losers. The winners could make out like bandits. So ask yourself, do you think that Alphabet can afford to become America Online? Can Microsoft afford to be a Yahoo-powered chatbot? Can you imagine xAI's Grok as Alta Vista, or Meta Platforms having one of its platforms turn into MySpace? That's one way to look at it. But it's only relevant if this is a typical private sector boom. And I don't think it is. Historically, the private sector booms, according to the Deutsche Bank piece, were financed with debt and stock issuance, way too much debt. In this case, the companies involved are all basically incredibly well-financed nation states with unlimited firepower. Lots of times I feel that it's winner take all, loser take none. But what if we're looking at these generative AI platforms and agents in a way that's too static, or maybe I am? What if there are so many uses once you build the thing that it's stupid not to do so? Which brings me to Jensen Huang, the CEO of Nvidia, the biggest winner from the generative AI infrastructure build-out. because only Nvidia's chips are strong enough, smart enough, and fast enough to develop things that we haven't thought of yet, or things that sound like total science fiction. Nvidia chips will be vital to make these designs come to life. And we don't even know what those designs are yet. I want you to listen to this. It'll tell you what I mean. You were talking about we need an amount of computation that's easily 100 times more than we thought. So far, so good.
Yes.
Last year. Were we that off last year?
Yeah, we're way off, yeah.
We were. We didn't see it.
Yeah.
We just didn't know how important it is.
Well, we realized that reasoning is very important to intelligence. And we realized that one-shot AI that we were using wasn't representative of intelligence and that we were going to make incredible progress. And last year, with reasoning models coming out, ChatGPT's reasoning model and others, and it just took off.
Intelligent factories took off. We didn't even know you could have them. And now they're huge. Do you think that the companies buying these chips don't know what they're doing? It's the opposite. They're trying to play a part in the next industrial revolution. There may be money to make for everyone, maybe beyond even anything that Joe Tsai could imagine. These data centers can become the brains of autonomous vehicles. They can be used to run chatbots at a speed that you can't even see. They can run robots that can do anything that we can do, but better. It's just too early to find out the winners because everything's so new and we don't know what these companies are really working on. When I was at GTC, the Woodstock of AI, I saw things I didn't even think were possible. More important, I saw things I'd never imagined. And that's why I don't think it's a bubble. The use cases are just too great. I'll let Jensen do the talking. Believe me, owning Nvidia has become a heavy burden for me. It seems to be at the epicenter of the so-called bubble, which is now why it sells at just 26 times earnings. And by the way, that's a true sign that people don't believe anymore. Nvidia's current valuation basically says that Joe Tsai is right. The bubble is about to pop. But let's think about that. When I was at GTC, I saw robots that look like humans, which makes sense because they have to be able to reach and bend and pivot like we do. But unlike us, these run on computing power supplied by Nvidia chips. When they figure out everything we do by ingesting video, they will clean the table, rinse the dishes, load the dishwasher, run it, put away everything, and then vacuum before going upstairs to clean your bathroom. You'll probably want to rent these robots. The oligarchs will probably own dozens of them. They'll probably have some Chinese ones, too, because the Chinese are still spending a fortune on AI hardware, except using inferior chips from Nvidia because they can't get the best ones. Believe me, they would love to get the so-called bubble going in China. So I cling to my positions, all available, look at my travel trust portfolio, and I stick by my guns. This might be the boom that doesn't go bust because the players are so well capitalized, it simply doesn't have to end that way. In some ways, I'm glad to see these Sunshine Patriot stockholders get a new leave so we can get a new clean slate of investors in these stocks. But the bottom line, if you're any of the hyper-competitive tech execs involved in this space race, you know what's going on. You hate to lose, and you won't let it happen. After all, how do you think they got where they are in the first place? Jason in New Jersey. Jason.
Jim, a big booyah from Marlboro, New Jersey.
Fantastic. Welcome aboard. What's going on?
Thank you. Jim, last month we had the heat going here in New Jersey, and we went down to visit my son down in Florida, and we had the AC cranking. My wife, Andrea, said, why don't you look into some HVAC stocks? Jim, your thoughts on Trane Technologies?
TT is absolutely terrific. We've had them on the show. They really know what they're doing. I like them. Give you a twofer. You mentioned Florida, West Palm. That is right where Carrier is. Dave Gitlin. Both stocks are excellent. I wish I had more time. You know what? I let that SOT run too long. That's TV talk for Jim Cramer. Jim Cramer's an idiot and overrode everybody and didn't know what he was doing. Okay, there's a lot of... Hey, come on, I'm allowed to do that now. It's our 20th. There's a lot of negativity surrounding the data center build-out, but maybe this is the boom that doesn't go bust because these top players are so well capitalized and they're run by such smart people. On Mammoth tonight, how could AI and automation shape the cyberspace? I'm checking in with Palo Alto. You're the CEO's take on the future of tech. Then I'm giving you another stock to watch that's had some success in this tough market. I'll tell you the name and the reasons for its run-up. And later, don't miss my sit-down with International Paper Top Press. It's a changed company. I'm seeing if the company couldn't have even a broader look at the state of the supply chain. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.